Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure ratio for market week ending Friday, March 27th, 2015. Market breadth. With this past week's market rise, our bull-bear point and figure ratio fell from 1.21 to 0.95, declining back into bearish territory. The total count of securities in bullish or bearish patterns fell 7% to 2,731. The count of bearish stocks increased 6%, while the count of stocks in bullish patterns decreased 17%. The Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 21 points for the 13th decline in 23 weeks. At a positive 108.40 points, it continues below all 9 tops above plus 100 and above all 5 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. After our TLB long entry at Tuesday 3/17 close 1 week ago, the CCI 20 fell below plus 100 at Tuesday 3/24 close for our exit point from the trade. The result of this trade simulation was a gain of 76 points on the Nasdaq Composite, or $1.54 per share of QQQ, the Nasdaq ETF. At minus 80.76, the CCI 20 daily now has 3 consecutive days below zero, so a change to Woody's downtrend looks likely next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 36 weeks ago, while the daily CCI 20 began a Woody's uptrend 6 weeks ago. At Friday 3/27 close, the CCI 20 weekly dropped below plus 100, signaling an exit from the trade begun after the Friday 1/23 close long zero line reject entry signal. We will report the result of this trade simulation in next week's commentary after our exit at Monday 3:30 open. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Bullish REITs continues in the top 5. Silver has left the top 5. Bearish networkers, disk drives, and semis have entered the bottom 5. Oil has entered the top 5. Gold and silver continues in the top 5. Oil services has re-entered the top 5. Focus this week from www.key-market.com. kitco.com Commentators Corner with Jay Taylor. The new order emerges. Some excerpts from the article follow. Not only the BRIC countries, but also some of our strongest allies are turning cold against the kind of aggressive action carried out by the U.S. We are on the verge of a major change in the global currency regime, and it is bound to have a monumental impact on markets, not the least of which I'm guessing will be gold and silver. Indeed, today was the first day in over 100 years that the London fix for gold and silver has ceased to exist. The propaganda machinery in the U.S. may have deceived most Americans, but it has not so thoroughly deceived foreigners. The latest example of that has been in the Ukraine. Not only have private NGOs pumped resources into the Ukraine to topple the elected government of the Ukraine, but then a massive propaganda campaign is undertaken to mislead Americans into thinking it is Putin who is the aggressor, while in fact the aggressor is the U.S. and NATO. Over the past number of months, many of America's closest allies have been abandoning trade in the U.S. dollar when dealing with China, because China wants to exit U.S. dollars, and Russia is being forced to do so by U.S. sanctions against it. All of these aggressive moves, funded by an illegitimate currency enforced by the NATO war machinery, is now coming back to bite the U.S. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to the coming week with optimism and enthusiasm, and, as always, wishing you true success.